Welcome back to another episode of our Mining Store update with a new face on the Mining Store side, Taylor, for our December version of our monthly mining update, man. So, Tyler, welcome to the channel.
Cheers, thanks for having me. It's good to come on.
Mate, I wanted to jump straight into some news that I've been seeing recently, just around, obviously, with the Bitcoin price down at around, currently at the time of recording, around 16,500 USD. Some of the biggest miners coming out saying they are pretty short on cash. A lot of them are in the negative. What's your sort of take on this? Can you just dumb it down for us with, from a miner's perspective, some of these bigger institutions with the Bitcoin price at this level, what it means for them in terms of them producing the Bitcoin, them selling at a loss, and just sort of the macro impact this might have on the market?
Yeah, of course. I guess it sort of comes down to two different scenarios. And obviously you were right before in the sense of retail investors, but then also the larger capital investment firms that have been, pushing money in for the last, 10, 12 months into mining. Their figures were done, off BTC at its highest point. So when BTC is, at a record low over the last 2 to 3 years, as well as the hash rate going through the roof, it just applies a lot of pressure in the sense of their energy consumption versus their profitability. So, a lot of miners, 2 years old are in the red now. So it means if they don't have significant backing, whatever they're selling in the sense of their BTC, they're not breaking even. So it's putting a lot of pressure onto retail investors, particularly if they haven't necessarily set up a strategy for the long-term vision in the sense of, paying their power bill out of pocket or relying on the BTC they mine to cover that cost. The stress is starting to overload. There's only so many months you can go at a loss. And I think, a lot of investors over the last sort of 6 months have been feeling that pinch. And that's obviously transgressing further and further. I think it's important to sort of look, it's the cliche saying in the sense of BTC, zoom out, right? But when it comes to mining, the strategy hasn't changed. Everyone talks about when they get into mining, you mine for, a period, the life cycle of the miner, if not a halving cycle. So realistically, yes, it's hurting at the moment. Do I think it's going to last a long time? No. So, if you can find a way to make it work for 12 months, if that means turning the miner off, if that means, subsidizing it another way, that's, I guess, the strategy that a lot of our clients are sort of figuring out at the moment, just to try and obviously make ends meet, but obviously make sure that they're not, treading water. You don't want to sell everything you mine because it's just sitting stagnant.
So I guess on the retail side, are you seeing retail investors tend to hold their Bitcoin? I assume a lot of the retail investors, like, you're mining Bitcoin to stack sats, right? Like, you want to build that portfolio.
Yeah.
What about the bigger guys, like seeing these guys that are really, when you're producing, I saw one come, I can't remember off the top of my head, was, record sort of quarter losses somewhere in the, tens or hundreds of millions of dollars, probably venture backed. What's that strategy for them? Because obviously, I was reading this morning, we're at the second largest crypto bear market ever. We've passed to the 2018 crypto winter. During that time, did a lot of those miners just run into the negative until the market returns? Do they turn off their actual mining? How does that sort of work?
I guess they're two different strategies now based off different timelines. Like 2018, miners were a lot less power draw to a degree. And I guess depending on your age of machinery, the efficiency is a different ballgame. A lot of miners nowadays, a lot of bigger firms that got in over the last 12, 24 months, their machinery is a lot more efficient. So the pinch is probably a little bit smaller. And there's different strategies they can use to try and cover that cost. But they'll obviously got to be a point where, they're losing too much. The board's going to be unhappy. They're not making enough profit. We've seen that with, Core Scientific going bust essentially. So there's obviously going to be a point where, the hash rate has come down in the last 24, 48 hours quite considerably. So I do see there being a bit of a cliff that we jump off in the sense of the hash rate, because a lot of companies will be turning off or they'll be on-selling their equipment at cheap. And to be fair, you can find very cheap secondhand machinery that, personally, I wouldn't go near, but you can find it. We're talking $10, $15 a terahash, which is unseen. So it's just put pressure all over them.
So do you want to dive into a little bit more around the hash rate and what that impact is right now? We've seen hash rate sort of drop off, what that means to the market and maybe, miners specifically.
Yeah, of course. So I guess realistically, the hash rate and the BTC price has always somewhat moved in a parallel. And I guess that diverged early this year in the sense of BTC going down, but mining hash rate going up. And I guess, to be fair, that's probably a culmination of the previous bull run and people purchasing machines and there having to be a wait. We had unexpected wait times of 3 to 4 months on machinery, just with shipping logistics going through COVID, as well as obviously manufacturing holdups with chips and whatnot. So that divergence didn't help, because it meant that BTC went down from 60 odd thousand US to 40, then down to 20, now obviously down to 16, and the hash rate continued to rise, which put a lot of pressure on miners, because it meant that your daily revenue in the sense of BTC Satoshis mined plummeted, because more and more people mining equals less. That has changed now. And that's probably because of the last few months, less miner sales, less people joining, more people turning off, et cetera, et cetera. And I think this latest drop, when we went from 20 odd thousand down to 16 and a half, that pushed a lot of people into the red, and not by 10, 20 cents a day, but a few dollars. So that is sort of where the real pinch hurts. And I guess that sort of is where someone who's in the industry looks at that as a slight positive, just because it means that we're getting to that point of capitulation, slight turn in the market, which is a good thing. It presents opportunities, as much as, the crypto industry at the moment is a bit doom and gloom, and, BTC price falling, et cetera. Someone who's been through multiple cycles, someone that's been in this industry for a while, looks at that as an opportunity. And, there's positive in that for sure.
So are you seeing, like, now when Bitcoin price is down, hash rate's down, it's actually for those people that can stomach not having to sell your BTC and maybe run at a loss in terms of, the production output, is actually a positive. Just like, investing into a bear market as a normal investor. If you invest into a miner right now with lower hash rates, you're getting rewarded more. As long as you can stomach the loss of the energy costs, It's actually a positive. Yeah,
to a degree. I think it depends on where your profitability lie. Like if you're talking, you've got someone who's on an older gen machine that's sort of 70 to 60 terahash or lower, that's going to be a really hard pinch. But if you're talking, you're on a newer gen that's still profitable, like a Hydro or an XP or something like that, this is a slight gold rush, because it means you're accumulating more during this period, which, you've already put the outlay. So the power costs are covered, you're just pulling in more. So yeah, it's a benefit for sure.
And just stepping back even outside of the mining angle for a second, more Bitcoin, what does it mean for the Bitcoin network as a whole when hash rate drops? Does that mean that the blockchain is becoming a little bit more centralized? Maybe it's like less mining. Does fees increase? From an investor perspective, is there any other sort of things that they need to be aware of when hash rate drops?
Not hugely. I think realistically, it just means that you're able to understand a little bit more about it as a whole. Like realistically, when mining hash rate drops, it does mean that there's a capitulation going. So you can somewhat, but by understanding the project itself, its tokenomics, the way it works, e.g., Lightning Network, you can then understand on how to safely enter or exit. Like a lot of people look at the RSI as well as where the DXY falls to somewhat monitor where BTC goes. I think mining hash rate really does paint a somewhat clear picture when you line it up with BTC's chart. You can look at the time frames and you can see when there's a drop in the hash rate, realistically, that's signaling somewhat of a capitulation and allowing you a point to somewhat estimate as to where you should enter. So yeah, I think it provides a little bit of clarity, but in the sense of information about where BTC is or what it's doing, not necessarily.
Okay, cool. And you mentioned just before we got on that there's a few strategies you and the guys are working on at the moment to maybe navigate sort of the market conditions right now. You want to maybe walk us through those?
Yeah, I guess something that's sort of come up in the last, I guess it comes back to, circa 2016, 15, 17 area when the rage was indirectly mining BTC. And, that was back when ETH miners didn't really know what Ethereum was going to do. So they would mine ETH and switch it straight over into BTC, or just like FPGA miners, same thing, So the new strategy that's somewhat coming out to a degree is, the new profitable miners that are coming out, e.g. KO3, the K7, even, L7s and things like that, they're making huge profits at the moment. So, realistically, we're talking $50 to $30 a day in profit. So decent margins. Yes, they're mining, let's take the K7 for an example, they're mining Nervos, which necessarily isn't exactly a top tier coin. It's sitting at about 0.002 at the moment. So by mining that and selling into BTC, you're making more money than you would be using a BTC miner, but it gives you also the opportunity to get in at a cheaper price because the machinery is cheaper, get a decent ROI, but also have the stability of using it to then buy BTC. So you're not as risk adverse in the sense of holding onto CKB for 10, 12 months and hoping it goes up. You can siphon a portion over. We're doing it with clients with KO3s, mining Kadena. Cycle over 75% of your profits into BTC every month. And then, the 25% that you hold into KDA, you can then get the uprise on that when it goes up. In the last 24 hours alone, it's gone up, 15%. So there's huge gains to be made by looking at it from a different lens.
And can you reuse those machineries into, let's say, those tokens for whatever reason goes tits up? Can you reuse those machines back into like Bitcoin mining, for example?
No. So those two particular machines are the newest reiteration from Bitmain, and Bitmain is trying to focus on mining, a particular token with a particular machine, so that I guess there's somewhat of less usability in the long term. Kadena, where we've done a lot of research into it, we've done podcasts, we've looked into it quite extensively, purely just because it does have quite a decent history. It is obviously a relatively new coin. It was founded in 2020. The two founders behind it, one used to work at the SEC, and the other one was an analyst at JP Morgan. So there's quite a bit of credibility behind it. CKB's been around for quite some time, so it's sort of gone through tried and tested to a degree.
Yeah, I think it's important for new people coming into mining. I don't know what your thoughts are, Taylor. I'd probably recommend maybe starting out with Bitcoin, especially if you don't have a crypto portfolio, to definitely mine it with those Bitcoins. But I think what Taylor's walking through now is a bit more of some advanced strategies you can think of, especially if you have the capital behind it. I wouldn't recommend if you only have 10 grand or whatever it is to buy these machines to go out and do that. Probably starting off with your Bitcoin stack first. But I think there's some interesting strategies you can try out if you've got a bigger portfolio.
100%, yeah. This is sort of something we'd be advising to people that have got a decent sized portfolio, sort of like 5+ miners, that they're necessarily feeling the pinch, looking for some variety. But if you're looking to get into the market, definitely be looking at an S19 as a good first step in, even an XP or a Hydra, something like that. Just some security behind it.
And anything else market-wise you're seeing? Obviously, just going back to where we were saying at the start, hash rate sometimes is a good indicator of capitulation. We've seen all sorts of stuff going on. I'm not sure if like the FTX stuff necessarily impacts miners too much, but any sort of general thoughts around the market where we might see next year takers?
Yeah, I think FTX sort of just puts a bit of a cloud on everything. I necessarily wouldn't say it determined mining too much, but I think it definitely would have impacted people if they had their mining into FTX, which we wouldn't advise. But I think realistically, the data that's come out prior to the Black Swan event realistically was quite positive. So I think once we get past this sort of murky period of uncertainty and FUD, I think we might find some stable ground. I think realistically a goal for Feb next year would be sort of around that 30k USD. If we can have some positive data, some tapering off from Fed rates, that'll help quite a lot. And then I think realistically going into the next halving sort of late next year will be where we'll find the most clarity, I think, really.
Awesome, man. That's been helpful. Anything else you wanted to cover in the month's update?
No, I just think if anyone's looking to get into mining, obviously reach out to us. We're not necessarily someone that's like you've got to call us to buy a miner. We're happy to discuss what's going on and sort of make I guess advice on where we see your position. So if you're looking to chat about anything, feel free to reach out. We also got a lot of educational content as well, particularly a new DeFi course that we're launching next week. So something for everyone is sort of our game.
Brilliant. And we've got a little discount code there for anyone interested. It's a referral link in our description below. But Tyler, thanks for coming on, man. Now the first episode, and
pleasure.
We'll see you next month.
Awesome, mate. Thank you for having me on. Appreciate it.
Cheers, guys.